Hey everybody, I'm back and super excited again despite the market downturns. I try to refrain from that F word, but yeah, look, it's been a really tough couple of weeks, if not a year. I mean, this 2022 has been a really crap year, but I'm always excited because I just see so many opportunities and I meet so many entrepreneurs that are really building in this space. And one of them is Tim Frost, who has kindly offered to come on to share with us his experience in crypto and share with him what he's working on right now and how he got into this space and building, again, another builder, creating real value in this new with this new technology. Tim, thanks for being here.
Hey, Stefan. No, it's a pleasure to be here, and I know we're always crossing paths, so it's good to get on your podcast.
Yeah, I mean, we met the first time in Seoul. I remember that, and yeah, and it was a great event before all this COVID and before everything, and it was just I think around 2017. So really around the ICO boom that was taking place at the time. You were launching a crypto bank, right? Helping people on and off ramp their crypto assets. Maybe share a bit of background versus me talking about you. Maybe you want to share a bit of background about yourself and then how you got into crypto and what you're working
Yeah,
on now.
absolutely. So,
Yeah.
no, thanks. Absolutely. So I kind of really started working in the space in 2015. We actually met the guys at Wirex when they were looking to
Yeah.
launch one of the first crypto debit cards out there, and I thought that was quite exciting, and kind of joined them and ended up running marketing and business development and operations for them for about the first kind of 2 years of operations. Helped kind of really launch that company and scale that company, and that was my first venture into fintech and crypto. And obviously, I didn't have a clue where it was going to go, and I kind of have built a career in fintech. This is my I guess now with Yield app, it's my third fintech startup, and I've worked with various other ones as well, and kind of really market positioning, scaling, kind of growth on that side. Um, as you mentioned, I spent about 2 years with Bank as well.
Yep.
I
Exactly.
kind of joined them and helped kind of build a lot of that team and take them to market, and they're doing quite well, serving a number of crypto companies, full offshore banking. They have a lot of big developments that they're working on as well. And about 2.5 years ago, I was on a kind of personal interest. I had some friends dabbling in DeFi, and we were quite excited about the promise. And to me, it was the first use case where I felt like crypto really had a position in the world with kind of on-chain finance. And so what we did with Yield App is kind of built a Nexo type of competitor, really focused on driving yield through DeFi. And through this last 2.5 years, this journey, we've kind of expanded that option. Obviously, we have a kind of a world class DeFi team. We just launched a kind of a regulated fund with Trovio as well a few weeks ago. It's kind of a DeFi fund managed by Yield App, and so you know, we believe in the world of yield, just conservative, safe yields for clients, and now we kind of manage capital in a variety of ways as well.
Yeah, and just sort of that's an interesting journey, right? In terms of entering into crypto, right? Sort of Wirex, which was a credit card that ran into certain challenges, but had was I think one of the first crypto credit cards, right? I mean, it was really the first one that really tried to build a solution allowing you to pay with your crypto in your wallet. And you had a
Yeah,
really big
especially early
relationship
on.
with Visa, right? I mean, there was a big
Yeah,
relationship with Visa and everything, right?
yeah, absolutely. It's been since I guess since the launch in 2015 with Wirex. I mean, it's gone through so many different journeys. Obviously, it's um, dealt early with the wave crest. We were initial with issue with the
Yeah,
wave
yeah,
crest,
yeah,
and
yeah.
eventually
Uh, uh,
those programs got kind of terminated. And so the Wirex founders actually did a tremendous job of just being able to relaunch the program, and so many others at the time just couldn't kind of pass the regulatory hurdles, and so yes, direct access with Visa, Mastercard now, and they're really built a good global brand, and so it's great to be part of that original team.
Yeah, it was really, and then sort of into EquiBank, which was really maturing that. And how did you get? I mean, Yield, right? I mean, that must have been around the DeFi summer, where all of a sudden, sort of around 2020, early 2020, all of a sudden these yield opportunities started coming to fruition, where I could then stake my funds and earn rewards associated with those. Or was it also coupled with the sort of proof of stake element, right? Where all of a sudden I could earn money by staking money by securing a blockchain, or what was it that really drove, you to create Yield.app?
Yeah, definitely. So part of this was just had spent time with Nexo at this. I mean, obviously, just they kind of opened up to the at least my eyeballs to the possibility of what the whole yield market had to offer, and then just I said just had some colleagues of mine and just understand that there was really passive, really extremely low risk, double digit yields at the time in DeFi, and that was obviously quite enticing. And that was obviously part of the DeFi summer that really gave a lot of attention and just got so many people start to build in DeFi. Is obviously Yield app. What we aimed to build originally was a regulated kind of full custodial solution on the front end that could be able to manage all the complications. Because even though I think you've been building in DeFi, we've been building in DeFi, but for the average person, I think it's still kind of voodoo for so many
Yeah.
people. But we've been kind of a bridge into that world, but just a safe way that people can just be able to earn on their crypto assets. So yes, staking and obviously so much involved in a lot of the major DeFi protocols.
And now, I mean, I'm going to, sort of ask the obvious, really. I mean, it's like, obviously, we've seen a lot of these lending providers or yield providers hit a bit of a snafu, not safu, snafu. And how do you fare, and what is your angle and thoughts on and how you're different to them, or what problems they went through that you are addressing or have addressed right from the get go, basically.
Yeah, so we've taken the approach, especially when we brought on our CIO about a year and a half ago, Lucas Keeley, which he has an experience at kind of a few decades of managing capital, managing portfolios, and launching products. So the one thing when we came on, obviously, it changed the way we look at risk. We do have a world class DeFi team, and we do have centralized strategies as well that we do run. But the whole thing is we've taken an approach of not lending out our capital and obviously losing control and obviously understanding what is there. What you've seen is, I would say, Celsius, and I would say I don't want to go too far into detail, but
Yeah.
I think they just didn't have proper risk management in place of how they're doing it. My what we've gathered is that they probably grew too quick, and they were more concerned about being an asset gathering machine rather than a proper custodian and managing actually these assets. And like so many, just they've given up custody, they've lend capital to essentially bad actors in the end. Which this industry moves in waves, and obviously we all start to kind of believe in the same things. Or we have good actors, we have bad actors, right? But this industry kind of moves in ways,
Yeah.
and sometimes due diligence can be cut short. So on that side, we've moved quite slow, which has been proven by just our track record that slow has been good and very
And
cautious.
when you say slow, what is slow for you? Is that in terms of marketing, in terms of customer adoption, or is it in terms of adding new chains or new coins to earn yield on? Or what is slow? How does slow define? How do you define slow?
It's due diligence is probably why things are
Okay.
so slow. So
Yeah.
we do work with some some of the best managers in the world with kind of running proper regulated funds, and before ever allocating capital to these, we do months of due diligence, both internally and use kind of external providers, and just to really understand these our counterparts at depth. In DeFi, we go through. We have like 135 point kind of checklist that we go through, and so any sort of protocol pool chain has to pass or rigorous process. So oftentimes these things do. I mean, it takes time to do proper due diligence, right? In an industry that moves so fast, right? It's
Yeah.
it's it's hard to not cut corners, and again, I think it's the only proven method out there.
Yeah, I guess it's just sort of you've got to work at it. You got to put in the time. You got to build trust, right? And it takes time to build trust. And I think, what I'm always impressed about what you've been doing is just it takes time, right? You've done this is your third fintech startup. Users are going to need to trust Yield.app and really get comfortable with it. So that's always impressive. And
Yeah.
in terms of, sort of going forward, right? I mean, one of the things that this cycle has shown us is that I suppose a couple of things. I mean, one thing is decentralized versus centralized, right? Everybody puts crypto into one bucket, but actually, it's much more than that, right? There's also these notions of, okay, if I put it in a centralized, it's not my custody, it's somebody else's custody, or it's my own custody, but then I'm responsible. I have to keep the keys. I have to look after those, right? And so, how do you view that, and what's your thought? Because from a UX perspective, I'm happy to give you custody because I know somebody else is going to look after it, and then I can also blame somebody else, but I also risk having a loss associated with it, right?
Yeah, right now I think more than ever, I think this is coming into question.
Yeah.
You know, I believe these parallel worlds need to exist, and I just don't feel that self custody of your digital assets or your capital overall is really a scalable solution. I think it's such a niche amount of people who can do it properly
Yeah.
and be able to manage their capital properly. So you do need good solid institutions that are running business properly. They have the proper checks and balances, the compliance department, the accounting department.
Yeah.
And I think everyone, at the top of everyone's mind is FTX, and I think it really caught everybody surprised. I think as
Yeah, for sure.
by they're always touted as the golden child of kind of crypto leading regulation, and all of a sudden, like,
You look at
whatever you thought about them before, it is quite shocking to see the bad practices that they had on pretty much all fronts. I mean, there were no checks and balances. There was no accounting team. There was no CFO. There was no proper controls and governance internally at kind of any level, and it's been shocking. I think everyone's still reading things as we go along every day and having discussions, and
yeah.
you know, I think this is a turning point for the industry of more accountability, more proper audits that are going to be forced on people that are to be able to be custodians in space.
Yeah, I mean, I think they really set up, and that sort of leads me to the second element, right? I think one of the things that really, and we saw this also with Terra, right? I mean, where actually they used sort of endogenous, tokenomics in order as a collateral, right? So they had their own tokens basically as collateral versus using external or third party as collateral, right? We saw that with FTT or with Terra in the case of UST. And so how, I think that's one thing that I think we're going to need to look at. And when you do the due diligence is looking at that, right? I mean, what sort of coin are as collateral, and how are you earning the yield, right? What are you doing with the tokens to provide that yield?
Yeah, I think Terra's been well, at least it should have been the wake up call for the whole industry of
Yeah.
how does that work, and using your collateral and actually paying out those rewards in the native token that you've kind of issued. on chain. So it's said it's we're still, we're a decade in, but it still feels like we're still quite early in the crypto world, and I think we've kind of taken a few steps back. In I guess this, I would say, over the last 6 months, and so, but again, these are, it's a market void. Everyone then starts to understand like what needs to be there, and yes, you shouldn't be using your own token that you've minted as ultimate collateral. And at Yield App, we never have. Just, it never even, I guess, came up in consideration with our CFO, because of obvious reasons. But we've seen so many actors in the space be able to utilize that. So understand why they would, and it's obviously it's kind of like minting your own money in the background to kind of bolster your balance sheets. But it's been proven to be bad practice, especially in turbulent markets.
Yeah. I mean, I think from sort of the Yield app. I mean, what you've really built is a front end user experience on a mobile device predominantly that has a great user experience. So you've solved the technical issue. You've enabled that with crypto. So I can give you my crypto assets. You've built the back end to support crypto, and then you've added that with expertise and individuals, that also human capital to then be able to wrap that around a certain level of expertise, due diligence, and quality. Would that be a right? A sort of, you're taking sort of the Robin Hood meets maybe a Coinbase sort of type example, and offered a yield opportunity off the back of that, given it that it's crypto.
Yeah, I think that's a pretty fair analogy of what you kind of just put forward. It's it. It just takes you got to be, I guess, have a world class team on all levels to really do it right. So, as crypto doesn't sleep, and so
Yeah.
deposits, withdrawals needs to happen 24/7, and those are
Yeah.
always
Yeah.
unique challenges for kind of all crypto companies. And see, we go through a series of checks and balances, and the real key to it is having the proper fund managers in space, and people that know they've had experience managing risk and kind of building businesses. So we're quite fortunate on that side. I think we have such expertise in house that are quite conservative, and especially this 2022 has not been an easy year. And
No.
so it's quite yield is there, but it's in abundance, right, in a complete raging bull market like we saw the 2 years prior. But really proper systems, and proper frameworks is needed, and is tested during these times. And it's I think that we're kind of near kind of what we'd see is probably a lot of the washout in the industry, and
Yeah.
a lot of the bad actors kind of being I guess outed at this point. But so we're kind of just in a build mode at Yield Up.
And so this must have impacted you, right? I mean, this whole market turmoil that's happened. I mean, you must have seen a drop in business, or a drop in user base, or increase in customer acquisition cost, or not at all. I mean, how's this impacted you from a business standpoint?
I think the question on centralized institutions, period, and there's been I guess over the last weeks, there's been a lot of, I guess, public momentum. People saying you should go back to self custody wallets at the moment.
Yeah,
So
exactly.
I think
That's
all centralized institutions have seen a flight of people going back to their ledgers, their hardware devices, and getting those assets back. Just as I think people are just not that confident right now. So we have seen some capital leave that was expected. We expect that there'll be slightly more continuing to go out, but I think the only thing we can do is be as transparent as we can be, and answer all the questions. We got a great community, a great user base.
yeah.
I expect clients and AUM to continue to come back in, but under we completely understand in the current market sentiment where if people, for a period of time want to bring their assets back in house. But I think it's creating a lot of good opportunity right now. And I think for us, we've kind of welcomed what's happened over the last 6 months, and just continue to build brand and trust, and ultimately, I think we're in a very strong position.
Yeah, no, cool. I mean, and where do you want to take it? Where do you see the industry going after all this? I mean, where are we going to go? I mean, yeah, everybody says that most people you talk to, it's, oh man, we're going to go through 4 years. It set us back so long, and crypto's really going to slow down, and we've really got to rebuild trust. But in my experience, it hasn't. We come back pretty quickly, right? I mean, within a year or 2 years, we come back. And if I look at after Terra, you went to Blockchain Week Korea, the home country of Terra Luna, and it was booming. It was packed. People were there looking to build, doing partnerships, and all of that, right? And so, how long will this take internally amongst the industry? I don't think too long, but for external participants to engage, what's your view there?
Well, I'll be honest. I think the last two kind of bear markets, I lost on a personal level. I had kind of lost potential confidence in the crypto space. I think that when the ICO bust kind of happened, I think myself and so many, I
Yeah,
wasn't very involved in the industry. But I think there's so much tangible value here, and especially, I guess, being in this position and building. I mean, to me, I think this is the greatest opportunity of our lifetimes of what's going to be done over the next couple of years of those building products, companies, and those investing into the space. I think they'll ultimately be quite rewarded handsomely. Will it take time? Yeah, absolutely. How long? I mean, yes, those things are never certain. Like we don't know. It's usually going to, I think, take less time than we
then
probably
people
forecast.
anticipate. Yeah,
you know, Before FTX, we felt that we were in a very strong position. There was a lot of institutional interest. Obviously, the conversations that we're having, I'm sure you're the same, right? We're very, and of course, this has set it back. But I think
yeah,
through the holidays, early next year, I think things will already start to heat back up. Um, and for us, again, it's just we're seeing, like, however long this is we'll never have a better opportunity in the middle of a bull run. It's really hard to build, right?
yeah,
I think that it's just you are busy 24/7, and
yeah.
things are going to be hectic. Right now things are busy, but we're you get to be in kind of a build phase. So we're building on three fronts right now, and three fronts that we really feel that our client base, the industry overall, has a lot of appetite in. Like,
Yeah,
we're one of the leading earn providers in the industry. We've
yeah,
been very transparent on this. We've gotten a lot of feedback back from our clients about or especially our VIP clients. They said, where do you get the yield from, right? And so we've gone through this, and they've said, can we get direct access to this? So that's been happening over I guess this whole year. And so what we've built out, we call the Yield App Digital Wealth, that will be launching early next year, which is direct access to our yield products underneath in more of a kind of a regulated fashion. So we have an offshore structure that's being set up, full administrators, and we're just getting that ready to launch. But people want access to yield, right? And we're in a world full of high inflation, and reality is people want and need to be able to earn on their capital. And if you can do it on a more transparent, regulated fashion, that's what we're gearing up to launch. So that'll
interesting.
be kind of access to our market neutral fund of funds that we kind of have invested in. There'll be kind of Bitcoin mining opportunities, and direct access to our DeFi fund, as a direct subscriber, which I think they said, I think we probably have the best DeFi portfolio team in the space, from my opinion. We're launching structured products as well. We see a lot of appetite, and we think that the industry is going to really um, ramp up. And so we're working on how do we kind of educate our clients on that, and kind of ease them in. But there's fantastic yield opportunities on this as well. So That's all in motion. We have a team coming on board right now, and a company of a full acquisition that's coming out very soon, and that's really kind of expedited our roadmap on that side. And the last one is, more than anything, I think you're going to see a move towards like how to build a better decentralized finance ecosystem, and so we are a builder on that side. We got a team, and we're kind of building our own kind of DeFi products and kind of chains on that side. So 2023 is going to be, I think, exciting for us and our community, and I think just the industry overall. It may be quiet from a lot of new market entries, market participants entering the space, and we have to understand that these things have scarred. There's over 1 million creditors sitting in FTX, and so it's, if anyone in crypto knows someone affected, right? Like there's no way about it, right?
So that's really interesting to me as well, right? I mean, just from a business standpoint, right? We launched Truflation.com, where we actually put on chain real world actual inflation. We track 18 million items on a real time basis daily from 50 plus sources on a census basis, not on a panel basis, not through only 80,000, not manual, not 60 days later, and not only tracking 80,000 items. So what we're trying to do, and we calculate real inflation in the US, it's about 7.1% now. And if you go to the website, you'll see UK is at 17%. But more importantly, what we're hearing is that people that read our website, and we, by the way, now have 80 developers building out products on top of that on the Web3 world, because we write it to the web to 6 different blockchains on a daily basis as well. So they're beginning to pick that up and work with that. But more importantly, we're really keen on how would we work together, for example, to build structured products to hedge ourselves against inflation. Right? I mean, what would such
Yeah.
products look like? Could we work together on something like that? Is that worthwhile
I,
us having a look and having a
I,
conversation down that route?
I mean, absolutely. I think it's worthwhile talking about. I mean, we're doing this through kind of centralized intermediaries right now. We have some good
Yeah, that's okay.
counterparts that we're bringing online,
Yeah.
but offering that in kind of the decentralized fashion, I think is absolutely interesting. So
Yeah,
we're happy. I mean, overall, I think our team should be talking probably quite close, and
yeah, because I mean,
exploring.
we're also talking, by the way, to a lot of fiat TradFi companies, hedge funds, private equity
Sure.
funds, because they want to use the data that we're aggregating to be able to calculate and predict what inflation really is, so that they can then buy these products to offset that, right? Interesting, yeah.
Yeah,
Uh,
yeah,
yeah.
definitely.
And then the other product that really excites me is obviously yield, right? I mean, we're launching a flat coin, which is basically
Yeah.
equivalent to about and it's over collateralized. So we have a lot of collateral that goes out and mints. Basically, think of it like a synthetic perpetual pegged to the cost of living. And as we do that, there's a lot of collateral provided in there. How do we drive yield associated with that collateral to offset, the increasing price, purchasing power associated with a Nuon? Or no, actually a flat purchasing power that offsets the declining, sort of purchasing power of a US dollar. And so if I look at all of that, how can I then provide a yield opportunity to collateral providers that I put my collateral in there? Oh, here's a yield app opportunity to stake and provide and earn yield
Is
on
your
your ETH, on your BTC, or whatever it
what
may be.
is the collateral being utilized at all? Is it liquidity for a DEX, or what is the what how is the
At the
collateral
moment, it's
used today?
locked in a smart contract, right? And so we're
Yeah.
providing, and a portion of it goes into a liquidity pool where the providers of collateral earn yield on that. But other than that, we want to offer collateral providers, because it's in a smart contract, it's their keys, it's their coins. But is there a
Mm.
way that we could offer them the ability to say, oh, put it in yield.app and earn X%, put it in anywhere else that you might want to put it in and earn Y% or something like that? Or maybe we just do with yield.app, that I don't know. Those are just ideas that I'm thinking through now as I learn more about what you're doing.
Sure, sure. I mean, it's something we could definitely happy to explore if we could work on that. But obviously, we do need custody of those assets. So
Yeah.
in decentralized finance, we are a massive liquidity provider, and
Yeah.
ultimately, if you can utilize your collateral for allowing that trade to happen, that's where the yield is actually generated from. And so if your community has appetite for that, it's something we happy to
Yeah,
happy to
I mean, we'd
explore.
have to work through the technicalities of it because we've tried to stay away from taking any custody, provide and enabling the users. But we did work on a solution before where we would work with the custodian as an offer yield, and then ultimately provide. Yeah, I mean, basically, it was a liquid token associated with the tokens that you put into a yield provider.
Yeah, why don't we?
Anyway, we'll take that
I
maybe
think we
offline.
definitely need to set up a meeting between teams and explore
Yeah,
a few of these points
exactly.
for sure.
But I think also interesting, right? I mean, not only have you built out a product, you've now also partnered and launched a fund, right? And so you're actually seeing a lot of opportunities. And the funny thing is, right now, where the market's pretty low, you've decided to launch a fund and look at opportunities to find, some gems in this build phase versus in this growth phase that we're in now.
Yeah, the primary focus of this fund that we've launched is it's kind of an income fund,
Yep.
and so it's passive liquidity provided by yield. So it's got the tracker. It's got 100% month over month positive returns, a good consistent
Wow.
track record. And obviously, that's done through a solid risk management, historically. And we're really trying to focus on bringing in institutional capital into the space, right? That
Yep.
are looking for good, consistent track record and consistent yield.
Yep.
And yeah, I think early next year we plan on really kind of pushing that forward. But as any investor, I mean, now is a it's a great opportunity to get involved if you have cash available.
Yep.
I think obviously there's good buying opportunities and all across in all markets.
DCAing, right? I mean, where do you find, one of the questions I always ask is, and there are cultural differences in terms of European money, US money, and Asian money, right? In terms of their aspects and their investment profiles. How are you see? I mean, I saw that a lot in development profiles, right? The software developers had the Europeans were much more engineering focused. It had to be really good. The documentation had to be well, and they were looking for the technology and the engineering, Vorsprung durch Technik, sort of type approach,
Sure.
right? And then the US was more about the marketing. Is this a good platform? Do you have the distribution, right? So the big brouhaha associated with an opportunity if I allocate resources to build on that platform. And in Asia, it was like, okay, where can I make money, right? How can I make money quickly? Will you pay me to write code for that platform? Or can I make money immediately off the back of this, right? Do you see the same in investment profiles and from an investor standpoint when you work with these institutions?
Yeah, definitely. I think that you've just kind of hit on a few stereotypes, but
Yeah.
I think it does reign true. I mean, there are certain marks that are looking for yield and certain that are looking for more long term value. And being we're Bangkok based, and being in Asia, the demographic obviously is a lot of people are interested in yield, and so we've
Yeah.
really kind of built an expertise around that to serve these different markets.
Yeah, and then and yield. I mean, inflation's not a big problem that much in Asia, is it? Right? I mean, they don't really think that much about inflation.
Uh, I think it's a problem everywhere, but maybe doesn't kind of drive the headlines like it does in a lot of the Western societies.
Yeah, I think the West is like, at least the US and Europe is just so, it's such unfamiliar territory, right? It's new grounds, that they're not really used to it. Um, and yeah, and so I guess that's the angle. Whereas if you look at like, yeah, I mean Turkey or Argentina, emerging markets, they're pretty used to it. And China has always been state planning commission, right? They set the pricing in a market, so they actually control inflation and how much inflation actually gets um, distributed
It's
across
going to
the.
remain a problem, right? Like
Yeah,
we know it's this is
yep,
an issue that's only continue to spiral out of control.
yep,
Can it be slowed down? I think yes. I think there are fiscal properties in that can be implemented that can slow things down. But we're seeing fragile currencies across the globe, and I don't think that's nothing new in our lifetime, right? And things are pegged in U.S. dollar, which is always brought consistency to it. And now I think for the first time we've seen really inflation kind of spurning the dollar, and that's definitely perked a lot of eyeballs. But by being probably the most at least today it's the most conservative capital, or if you're going to hold money, right, you want to be holding the dollar if you're going to be holding
yep.
fiat currency. I think at the moment, and it's been proven this whole year, but it's not without its issues for sure.
And so, do you think? I mean, what's your thoughts on sort of the more, the renminbi, or the, the sort of coalition between the BRICS nations to try and set up an offset to the US dollar? Do you think? What do you have any thoughts on that?
Um, you know, I think there's I think overall for these nations, I think this is get kind of a positive way of kind of separating themselves
Yeah,
from Western dominance.
yeah,
So it's everything that's happening in Russia, Ukraine, and it's really just kind of pushed these initiatives forward. But it definitely has changed global trade. I mean, you see things are already priced differently. Even being in Thailand, you see that a lot of the way that things are priced now have kind of they've removed association from the U.S. dollar for so much of it. So I think you have seen a big movement globally, which just traveling the world over the last 20 years. I think pricing things in dollars was very common, and at least I think we can see it in kind of in real time how there has been shifts, and there's kind of a mentality shift, which is got to be concerning. It is concerning for the U.S. dollar because that is such the position to be in, right, and to lose dominance
yeah,
on that
yeah.
is unknown what the outcomes are going to be.
Yeah, it's sort of, as Raoul Pal puts it, sort of the success is the downfall of the US dollar, right? That dominance is the downfall. And one of the things that to me is interesting is, I mean, ultimately it grew through the petrodollar, right? Through the oil trade,
Sure.
and ultimately, um, where, now all of a sudden will the Middle East accept of alternative currencies for the oil that they'll be selling to some of the other nations, right? And so that's going to be interesting to see.
I think it's really shaken. I mean the way kind of we see the market. I mean, I'm very bullish on the future of crypto, and understand this is what it
Exactly. Yeah.
is. But looking outside of the space, I think for the first time in probably our lifetimes now, like there's so much uncertainty of where the what the future holds, and where ultimately you should be looking to invest. It's a new time that I think that's really they're so divided. I think all the experts are so divided right now on what's going to be happening over the next couple of years, and the opportunities we should be looking at. So I think it's The days of just putting your capital in it's one asset class, or is and just kind of leaving it there, and checking back in 20 years is it's just not, those times are not here. You have to be a very very diligent investor in everything you're doing.
Yeah, and I think that's been great with your product, right? And in a way, um, I mean, on the one hand, you have the volatility associated with crypto, but on the other hand, you're earning yield on your crypto. Whereas in a bank account, you leave your dollars there. Number one, the dollar's depreciating, and number two, you're earning nothing for it, right? So you're trying to save cash, but it's like so. It's an interesting dilemma, I guess, but it's been great for driving and moving funds into yield generating opportunities, right?
Yeah, there's plenty of yield opportunity out there, and that exists in the market today. Just you got to be very prudent and understand really really well where those are at, and
Yeah.
yeah.
Yeah, no. I mean, and sort of where, sort of from your perspective, where do you see really the opportunity, or what are you looking at in sort of like say the next 6 to 12 months? I think anything beyond that in crypto is like, wow, it's like super far. Who knows where that is? But even 12 months is pretty far out. But where do you see, and where would you like to be investing your time, and how do you see that evolving, and where we can go from there?
Yeah, particularly, I mean, we believe fundamentally that there's a there's going to be a big regulatory shift. We've been talking about this
Okay.
since, at least since I've been involved working in the crypto world. But I
Yeah.
think more than ever, you're seeing that real action is going to take place right now, just because there's been so many retail investors affected. So I expect policies actually going to be put in that. So understanding as clearly as we can where things are going. KYC, AML. Obviously, it's a big concern of crypto assets overall, and so we're looking to build more products that kind of are I think what we think of more suited for where we think crypto ultimately is headed. Right, there will be the fully decentralized anonymous aspect. I think that's just kind of the fundamental roots of crypto, but we really foresee a lot of opportunity kind of on the, for those looking for kind of a safe haven in the crypto world. So, um, building better products. I think most financial instruments that are happening through the financial world, as you just kind of mentioned, structured products, they will be happening on chain ultimately. I
Yeah.
think these are kind of more complicated. I think the dexes have really brought things to life, but you've seen options markets as a peer, and you're just going to see so much innovation coming. So as long as we can do this in safe, conservative fashions, where people can custody their own assets, yet be able to participate in the financial ecosystem overall. So I think looking at building a little bit of a hybrid. I mean, these are the particular things I'm interested in. Working with different entrepreneurs is well, kind of in that kind of realm. And I think it's just inevitable that we're just gonna there's gonna be a demand, right, where people are gonna know kind of more of a proof of coin, and when you're kind of on that off ramps and on ramps into the crypto world. I think it's just gotten so much attention, and it's gotten so big.
Yeah, no, definitely. And where, sort of, uh, I mean, I don't know. We saw that in 2017 or 2018, really, right? When the ICO boom happened, there was a lot of pressure for regulation, right? All of a sudden, we had more and more lawyers enter into this space, right? Where all of a sudden, agreements started getting longer. You couldn't just do a community-based, token launch. You needed to have agreements in place. You needed to do KYC and AML.
Yep.
And I think those are all pretty standard, I'd say, in the industry today. And I'm just sort of wondering how the regulators are going to react after this because of one bad actor, one Bernie Madoff, right? One Enron, right? Which happens in any industry, anytime when just the value and the greed just grows, substantially. And everybody thought Enron was a nice guy and Madoff was a nice guy, right? He was sponsoring all the politicians and was doing all the right things, supporting the right charities, going to kids' soccer games and things like that. And anyway, it's going to be interesting how that pans out.
I don't think it's just one. It's not just one incident. I think now it's just kind of the maybe the biggest, most unexpected incident to happen.
Yeah,
Let's see what's happening with Terra Luna, and you just got so many people that rallied behind that, and so when they started becoming what is foreseen as the smartest, wealthiest people in the industry, kind of really rally behind that, just really helped to I guess push so much capital into Terra Luna, and we know what's happened there. Three Arrows Capital, again, these guys come from the traditional world. They
yeah,
came with a
they
lot
were
of baggage on
traditional
their
guys.
hand, and we know that didn't, that
So, do you
ended
think
up
any of those
poorly.
guys are going to go to jail? Do you think anybody's going to go to jail, or what's your
Uh,
thought there?
I seeing seeing the headlines with Sam right now, and
Yeah,
I think Sam is, if I had to put like an odds on his act versus likelihood of being incarcerated, I think he probably is at the top of the list. But you're seeing the headlines. I think we're all seeing it, and I think we're all just face palming ourselves, right? Like every time
yeah.
we see another pro Sam headline. I mean, the other day was like, oh, he failed because
New York
his
Times,
investors
fluff
lost
piece, and
confidence in him.
Fortune.
It's like,
Yeah,
what are you talking about? Like, and I think Elon even responded to that article, and it's just like, oh my
yeah.
gosh, guys, like this is so. I think this is a good test to see what corruption looks like from the top of how this plays out. I
Actually,
think
that would
that's
be
we
interesting.
can. I mean, this is it. I think this is the
I mean,
you
yeah. Do you
have
think
you
it will
cannot have a
go?
guy.
Do you think it will go above that? Do you think we will take it up in terms of seeing where his contributions went and what results came out of that? Was that real corruption at the U.S. government, federal institutions level? Right?
Absolutely. So I think we have, I mean, so much interest, so many investigative reporters on this right now.
Yeah, that's
I,
true.
I imagine it will start to come out, but it's I'm I'm not much
Let's hope so.
for conspiracy theories or whatnot, but there's he has made a significant donor. I mean, it's like the one guy in the whole industry that if anyone could get away with what he's done, it's that one guy. It's this one guy. We all know,
Yeah,
right? Like he literally, from the time he started, corrupting his own book, he was building up the other side is through all of his donations and everything that's happening on the side. So um, you know, I don't know. I think we're all kind of just watching this kind of play out in real time, and I
in
think
real
it's
time.
we'll see in 6 months. If Sam's still free, living in his $30 million condo in the Bahamas. I mean, we'll kind of know what's the reality, but it's I think this something should happen, right? And I
Yeah,
think that the industry I think the industry is demanding it. Like
yeah.
I haven't seen anyone come to Sam's defense at all. Um, you know, besides
Not in the industry
besides
yet.
these
Yeah. Besides New
besides
York
these
Times.
reporters, for sure.
No, awesome,
Yes.
awesome. It's like, I mean,
What do you
not
think? What do
awesome.
you think, Stefan? I don't know what you think on this. What do you think is going to
I don't.
happen?
I don't think he'll go to jail. I think he'll stay extradited. I don't think anybody's going to go to jail for this. I think we saw that in 2008. Nobody went to jail from Wall Street. You got to jail because you wrote bad emails or chats were cheeky. They were non-PC. we live in a wokeist world where as long as you act PC and politically correct, I don't think, I think you'll get away with it. Oh, it was
Well,
so it was
he's
just
not
a
even
little
doing that at the
dumb,
moment, though.
like
He's
his
like
fault.
ratting
It was just
himself
bad
out
for him.
as well,
Yeah,
right?
yeah.
So it's like he's definitely pushing the boundaries, right? Because he's going and contradicting himself all the time in these private conversations. That
Yeah.
it's um, I I think you're right. I think there's a very high likelihood he doesn't, and I think that only does more damage to the whole industry
Oh, for sure.
if 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 this guy just remains a free man for the rest of his days.
I mean, it sort of just shows you that actually it pays off to. I mean, if you can afford lawyers, just it pays off to make enough money. Just make sure you make shitload of money and put it aside, and make sure you can afford the good lawyers to do that. I mean, okay, the first sign I was surprised by was that what's the Theranos lady? What's her name? Holmes. She got 11 years. I mean, I was surprised to hear that. Right. I mean, ultimately, it's going to go to appeal, and then they might settle, and they might settle at 6 years, and then she serves 3, and then she gets out on good. But still, I was just seeing the other day Enron, right? I mean, what was the guy's name? Not Ken Lay. It was the Skilling, Jeff Skilling. He was sentenced to 24 years, but they let him out after 12 years. And he's now out and he's back doing business again. He's not allowed to sit on a public board, but he's allowed to do business he's in energy trading again, which is which is, I mean, okay. I mean, I
Yeah.
guess you can't stop a person from making a living, but and I do believe if you do the time, if you do the crime and you do the time, you should be, I mean, you should be allowed and be forgiven because you did the time for the crime that you did.
Yeah,
And you
absolutely. I
should,
mean, society they built up this. Obviously, people do make mistakes, and people do
yeah,
come back from them time. But like anything, I think we're just gonna see how this all unravels over the next I guess weeks and months, and
yeah,
but yeah, I think if there's no action, I do foresee it's just the stigma in the industry just remains. I don't think anyone's well. You never know. I mean, these headlines are getting out there. If people are actually reading this, maybe there are sympathizers out there. But there's a million creditors right now that are going to be stuck in bankruptcy proceedings for the next probably 5 years. I mean, this is the most complicated bankruptcy ever, is what we're hearing, right? And
yeah,
obviously,
yeah,
there's just no documentation available. There's missing funds all over the place. Like this is, those that have capital locked up, even though they can be recovered, you're talking, I think it's 4 or 5 years along. I mean,
yeah, if not more,
has
right? I
Mount
mean, look,
Gox even settled yet from those
it's not
from the
settled yet.
creditors from that?
Yeah, I
Has
mean, it's
Mount Gox
funny. I've
traded?
been meeting through this. No, it's not settled yet, right? I mean, they're still
Yeah.
waiting to receive their money back, and I mean, the advantage is when you had your money in there, it's now made a lot of money. You've actually, it's a hell of a lot more worth than it was when it went into court proceedings. Um, that said, it's amazing. I've just come across a whole industry of people that want to go out there and buy accounts, right? I want to buy your FTX account, 30 cents the dollar, and it's going at 35 cents the dollar or something, right? So I can buy an FTX account today at 35 cents on the dollar value of what it is today.
Okay. Where's that marketplace taken?
Oh, I mean, it's all OTC. I mean, I was just been talking to a couple of people, and that's what I've been told.
Okay.
Yeah. I
Well, I'm sure
mean,
there'll
I
be
can put you
a
in
hot
touch with
market
some
on
of these
that.
people
So
if you're interested. Yeah, no, I mean, it's definitely really uncertain. So a lot of people are uncertain and don't yet want to enter into that risk. It's just a bit big to them. Whereas these are all the same people that bought out. You had a Mt. Gox account. I'll buy your Mt. Gox account off you, right? And I'll pay you. Today it might be 80 cents the dollar, or I don't know what it is, but that at the time I'm sure it was equally at a discount, at a significant discount. Yeah,
Interesting. Well, the
yeah.
free market works very, very quick in crypto world.
Exactly.
So
And that to me is the beauty of all of this, right? It's a free market, and there's no taxpayer money that came to bail out any of these companies. It has been the industry that took the hit and rebuilt and went ahead and moved forward off the back of this, right? Nobody asked for a bailout. Nobody asked for any kind of support in this, right? And we will fix this industry and we move forward ourselves, right? And I think
that's that's a
that's
good point. Yes,
yeah,
that's one of the probably the biggest differentiators is just there's no central bank there's no central governments there that can just kind of print your way out of this and bail these things out. So banks have received bailouts throughout time, right? And
yeah,
will always. But yes, any centralized crypto institution there is no bailout, and
yeah,
it is fundamentally different. It's a very valid point. And so, if anything, right, like crypto institutions, the level of scrutiny that they're going to come under needs to be at a much higher extent than in even traditional finance institutions, because they're exactly that. There is no bailout button.
yeah, and it's a ruthless capitalistic environment, but it works, right? I mean, and to me, I mean, there are a lot of flaws in it, but actually, it attracts a certain talent to this, and it also takes a certain set of skin to be able to take some of these cuts and etc. But I think over time, the you know the cuts have gotten less. I mean, I don't know. I mean, dollar wise and absolute, individually they might have gotten more significant, but as an overall, as a contrast to the industry, Mt. Gox was 70% of the industry at the time, right? FTX is less than 1% of the industry now, right? I mean, so it's a significant difference as a contrast to the overall perspective, right?
It's an interesting way of looking at it, but I think I mean I was not around in the Mount Gox days, and how that all played out. But I think right now, I think it was much bigger than 1%, right? I mean, you see, a million creditors, probably thousands of institutions that are essentially creditors to what's happening. And I think it's essentially it's one way, shape, or another. I think this is literally is affecting probably everyone in the crypto space at some level. Even if you had zero exposure or what,
Yeah,
it's just
yeah.
your client base, your user base are kind of throwing up their hands at a different. So, but my guess, Stefan, you're probably a little bit immune. I think you've been in crypto so long, and I think you've just kind of built enough battle scars where you can kind of shrug another one of these off.
No, I mean we're never immune. I mean it always hurts. It's very aggravating, and it's very painful. And I've been a big believer in decentralized worlds, and to me the big hit was really Terra Luna. I mean I never saw and I never believed that a layer one could just disappear. And if I look at all these attacks that happened in one single year, I just can't help myself to think that this is a concise attack against the industry, right? They want to
Sure.
bring CBDCs to market, and they want to disrupt and discredit the crypto industry in favor of CBDCs. I just can't help think that. And um, but what can I do? Even if I think that, who the hell cares? It's like, what can I do about it? I can only live and move on and try to build. and really protect the decentralized world. I mean, I think that's the non-custodial world. That's the last bastion, um, as a reason for creating a separation between state and money.
Are you seeing a big influx of what you would see from new revived interest in DeFi,
Oh
over
yeah, I
what's
mean,
been
look at the
happening?
volume. Just look at the volume on Uniswap. It's now surpassed a billion, and daily trading volume. It's all on Uniswap, right? So on Ethereum, and everybody's now sort of moving. And I think there was a 30% increase in demand for ledger wallets, right?
Yeah,
And the activity of moving coins off exchanges into decentralized wallets. That's definitely happened. I mean, the downside with that is there's no yield associated with that, right? So you don't earn yield on that, right? I mean, so where can I go for yield? I can still go in decentralized yield farms. I can go into Uniswap yield farms. I can go on to Curve. I can go on, but the user experience associated with that requires a certain level of sophistication. So it's not exactly intuitive in terms of how to
it's
earn yield on those environments.
it's. I mean, don't get me wrong. I mean, there's just as many risks, if not more. I mean, we're looking at infographic this morning, and there's been I think over $3 billion now in DeFi in different exploits, right? So there's dangers are very abundant, and you got to be very actively on the management side. I mean, in the decentralized landscape, you just can't, if you got a significant bankroll, you it's very actively managed, and the
Yeah,
time involved, you got to be monitoring stuff very quickly. I mean, even I think what we saw last night with Curve. I mean, I don't know if you saw that the big
yeah, I
short
saw that. Yeah,
position on
yeah,
Aave, and
yeah,
I mean, you just start seeing all this stuff. It's just another wild day in crypto, and just obviously we're following that very closely,
yeah.
and
You
trying
must
to,
do.
to forecast the different scenarios there. But as a kind of a consumer, just someone that wants to participate, I mean, I mean, where how would you even start to understand what's
Yeah, I
going
mean,
on? And
it takes a while to get into it and understand it and navigate your way around it.
for
No doubt
sure.
about it, right? But even if you look and you aggregate 3 billion together, that's chump change compared to what's happened with these centralized exchanges, with Three Arrows and with FTX, right? I mean, that said, 3 billion is still a shed load of money, and it is not good. And if you look historically, the biggest breakpoint has been around these bridges, right, where
Yep.
they converted across, and so that has been, in my view, the biggest vulnerability that we have not yet solved in the industry, and we need to solve that, no doubt about it. Um, and there will always be exploits. I think if you talk, and I don't know about Yield.app, but I'm actually maybe interesting to hear from you. Do you, you know, I mean, a lot of the exchanges they get hacked, and the banks, by the way, the same thing. They constantly having attacks on their
Yeah.
servers, on their systems. Bots, hackers from around the world are constantly trying to penetrate their systems to get into customer accounts. I mean, are you experiencing that at Yield as well?
Oh, absolutely. I mean,
Yeah.
anytime you're a significant player in the space, you have
Yeah. Right.
assets under management. Yes, you get a lot of unwanted attention. So, yeah, I mean, we got people looking at us obviously daily, and it keeps our security team on their toes. Obviously, just and then building up all these checks and balances internally.
Yeah.
So it's going to always be the case, right? I mean, it's only going to continue to grow. I think over the decades, especially as we have a digital world that moves extremely fast, right?
Yeah.
And so these are
24/7.
um, I mean, even in the banking systems as well. I mean, just financial institutions. I mean, capital is moving, right? It is fast. And there's vulnerabilities that naturally persist. So we see it in DeFi. You're right. Every time there's an exploit, it's public. Typically it's on Twitter before even the developers themselves know, right? And a lot of
Yeah.
times you even kind of it's funny how the world works. It's like there's you'll see someone tweeting at one of the big protocols like, hey, you better check out this, right? And it's just how the really starts to travel. But yeah, for sure. I mean, every crypto institution, as any financial institution, is going to get a lot of attention.
Yeah, I think that's. I mean, that's on the one hand we have that downside, but on the other hand we have an extremely observant police, and that police resides on, and it's a community police, right? And that resides on Twitter that spreads, I mean, the news really quickly. I mean, it's a challenge as well because on the one hand you have people reporting on infringements, on bad actors, or on possible exposures, but then on the flip side you have a lot of FUD, right? And so how do you differentiate between the good and the bad? And it's only time that tells, right? Where you then have a list of sources that you can rely on,
Sure.
and you know that they're doing their due DD and they're not just spreading rumors and trying to create panic.
Yeah, you see a lot of that, and so I think well, I think right now, I mean, in particular, people are jumpy at everything, and so that's why even just weird accusations are gaining momentum, right? Just because
Exactly.
everyone's on edge of what's going to happen next
Yeah.
in the space, and everything with Genesis right now. I mean, I think we were talking before we started this, right? Like everything, we're all just on edge, waiting to see how this ultimately pans out.
Yeah, I mean, no matter how it pans out, right? I do feel that, and most people I talk to that have been in this space for a while or have committed to this space are still and remain true believers and are continuing to keep their heads down building. And you go to, sort of developer conferences, right? So sort of the blockchain themselves, their blockchain, and you speak to the developers there, they're just heads down building. They're not watching mainstream media. They're getting their news from Twitter. They're actually just going like yourselves, right? You're just building. You're trying to build the next platform, looking for the next opportunity, creating trust, building credibility, building a secure platform where users can engage. And so to me, that represents a significant optimistic progress that we will be building going forward. And that's why I remain super excited in this industry. And I want to thank you, Tim, for investing your time and sharing your opinions on what's happening in this space. Where can people follow you, and how can they, keep up to speed on what Yield is doing, and where can they download the app?
But definitely, you can go to the app stores, the Yield app in Android and iOS, or
Yeah,
you can directly sign up on Yield.app on the.
yeah,
And yeah, myself, you can follow the company at Yield App or at Tim Yield on Twitter. And always happy to hear if you want to connect with me on LinkedIn. Active there, and love to engage with conversations, and always looking to work with like-minded partners of people just kind of want to build a better decentralized ecosystem overall, and in just the crypto universe. So Stefan, it's always a pleasure to talk to you, and I really appreciate you getting me on today.
yeah. Thank you so much for your time. Really appreciate it, and always impressed with your network, your insights, and your ability to navigate a lot of this ecosystem. So great being connected with you, and look forward to seeing Yield rise to its maximum potential. So thank you for your time, Tim. All the
Absolutely,
best, and thank you.
perfect. Thank
Perfect.
you, Stefan. Pleasure today.
Thank you, Tim.